Hello, everybody. Welcome to this webinar organized by Wellford in collaboration with CLSA Securities Malaysia. Our webinar title today is 2026 Market Strategy with Seasonality Analysis for Bursa Malaysia. So my name is Shen Chu. I'm the moderator for this webinar. Now, 2025 is drawing to a close. So as we approach 2026, the key questions investors always ask are what are the mega trends shaping the global market next year? What are the key trends that we should watch out for? Are there any seasonality patterns that we need to be mindful of? But with the right tools, insights, and a clear strategy at hand, 2026 can be a year of opportunities if we position ourselves early. So join us in this webinar where we have two speakers who are respectively Martin Wong from TradeVSA, who will break down the key forces driving Bursa Malaysia, plus the major signals from the US and China. And then we also have a second speaker from CLSA Securities Malaysia, Mr. Zac Chooi, who will explore with us how do you use structured warrants to get more out of our trading strategy. So before we begin, disclaimer, whatever we share in this session is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any securities that we mentioned here. If you decide to make any investment decision, you're solely responsible for all your investment risk. Now we will kickstart the session with the first speaker. So he's none other than a co-founder of TradeVSA, Mr. Martin Wong, who is also TradeVSA is a fintech player in the financial market analytics landscape in Malaysia. So Martin began his career as a system engineer in Intel and later on as a technology analyst with Accenture in the financial industry for 8 years. So upon completing his MBA, he began to pursue his passion in investment and securities industry. So he applied as a financial analyst in CIMB Investment Bank and has previously acted as a discretionary fund manager with over 45 million of account under management with Philly Capital with portfolio in Bursa Malaysia, Singapore Exchange, and the US market. So he previously held 3 licenses in stocks, futures, and fund management in CIMB Investment Bank, Jupiter Securities, and Philip Capital Asset Management. So he also wrote 4 books on investment and trading and were the bestseller in local financial books during this period. And now he's a full-time investor who dedicates his time and resources to nurture the youth in financial literacy. So very pleased to meet you here, Mr. Martin. How are you?
Thank you, Shane. Thanks for your invitation, and it's good to see all of you. So this will give me definitely a good chance to talk about 2026.
All right,
and
perfect.
Of course, I want to talk about 2025 first too.
Yeah, you may begin to share your screen.
All right. All right, welcome all. So before we start, I'm going to be talking about 2026, but we cannot so-called look forward without seeing what happened in 2025. So tonight is going to be looking in the past 2025 as well as going back to 5 years and even further down the road, maybe 10 years, and to see whether there's some sort of a pattern that I always talk about this. Yeah, so this is also my intention. And again, I have a disclaimer. So a lot of materials that we say here are actually viewpoint, and investing has its own risks. So make sure you know what you're doing. All right. Now, a little bit about our company. Our company is a fintech company. We are also one of the first who came up with a proprietary trading algo. And we were very happy to be honored the MD status. So a lot of our algo actually runs in the digital platform in here. And as such, we also apply to the Securities Commission of Malaysia. And we are the first and only so far investment digital advisor. So a lot of our advice are algo driven. It's not human driven. That's the different. And we can cover a lot more sectors and a lot more industry, as well, that the same algo can go for both SGX, Bursa Malaysia, Hong Kong stock market, and the US market. All right. So, and let's talk about the first misconception that a lot of people talk about is the GDP growth. All right. So if you look at the GDP growth and you look back in the market cycle of the Bursa, in this case, if we go back in the chart here, let me just bring this up and bring it here. So let me just have a pen here. Okay. Yeah. Okay. So if you go back to 2016 all the way to 2025. All right. So you can see the gray line here is the GDP growth. Now, a lot of people say that GDP growth will somehow dictate how the stock market will do. All right. Let me tell you upfront, it is no dictation. Okay. There is very little correlation. On one way, you can also say that when the stock market fall, right, then you will get likely a recession. So the stock market is always a a leading indicator, something like maybe 9 months to 12 months, those kind of things. So there is, as the time passes by, especially in the US context, you can see a lot of people saying that in the US, we are getting signs of recession, at least what 24 states, right? And but overall, US is still prospering around 3.1% GDP growth. So why I bring this up is very important that the listener and the audience need to think separately. You know, the GDP growth and the stock market, how high it can go is different. So you see from here, this is the GDP growth, which has always been centered around 5%. Okay, somewhere 5.5. And right now, we are at 5.2. And yet, we could not break above the 1800. That was the highest we ever went up to. That was in 2018. Okay. So, of course, we have the big drop in GDP growth that was during the COVID year, right? And since then, market rebounded back. But yet, our CI didn't really go that much, with the exception of 2024, which was a good year and was really driven by data center and all that. And a lot of people who went in and buy data center, if they held on, now they're coming back to ground level. And it's a shame, you know. And later on, I'll talk more about that. So one of the reasons I've been thinking a lot, why can't our KLCI market, the CI, go higher? Now, one of them is definitely we don't have big listed tech company that is growth like what we seen in US. Okay, so when US, you'll see a lot more of this, and that's why like the Magnificent Seven versus the remaining of the S&P 500. That's why you see that S&P 500 continue to go higher and higher. But in Malaysia, we don't get that, you know. We did have one was Grab, but it went over to Singapore and then eventually went over to NASDAQ. All right. Another thing is also we are pretty much dictated by the foreign fund inflows, right? Usually when you look at the Bursa will publish this in their website or on the Star newspaper or even some of the website of the report that was come out from the analyst or broker. They have local participation, they have retail participation, and they have foreign participation. And that's the one usually you want to pay attention to it too. Okay. Let me just clear that out first. Go to the next slide. So foreign funds. Now, if you look at the foreign funds, which I have here, you can see this green one and the red one. Green is inflow, red is outflow. All right, and the blue is our KLCI. Definitely on top of it, you could see whenever we have outflow, okay, here, all the red one, you're going to see, Bursa trending downwards. So that means whatever, expectation that KLCI will go higher, we need the foreign funds coming. I think many of our listeners would have known that, and this is nothing of a news. So we are highly dependent on that. And for much of 2025, we have a large portfolio exited year to date. Okay, so then the question is, are there any renewed confidence in the so-called, as I said, going back to the first question, the GDP growth of the country? Or is it going to be something else, which I'm still looking for it, to be frank with you? What kind of catalyst can make our CI go higher, right? Then you'll mix a lot of what we call buy and hold investor very, very happy. Imagine you bought NVIDIA 2-3 years ago and it would have gone up something like 300-400%. Okay, so will we ever able to find that? The question is still question mark. All right, question mark. All right, next. Then we're going to look back all year by year, the returns. Okay, now we can see that the purple one that you see here, okay, this purple one is the year-to-date return. And now with the exception going back to 2013, every year was a positive year. But since 2014, right, we have sporadic more losses and gain, with the exception of 2024, right? 2024, I said before, data center infrastructures all coming in, then we have that. And this year, even beginning of the year when I'm already doing my live talk, the Chinese New Year this year, I said that we will end up with a negative here, and it is around -3%, at best maybe +2%. And guess what? If there's going to be any rally, if you look back on December here, okay, we usually get a rally, like just like last year, that 3%. And you know when they come? After Christmas, after Boxing Day. I remember 27, 28, it was up something like 1%, 1%. And then on the last 40 minutes, on 31st of December, the market moved up. It was all due to window dressing. So all this that you see is window. Right now, we are about -1.8%. And if this pattern holds, our market are struggling between 1600 to 1640. And that's going to be that level in here. Sad to say, it is all due to window dressing that we see this 2% gain. But no doubt, for the month of December, it's still a positive month. Now, that's first you conclusion that I want to draw. Second is the 2025 and 2029, 2019 and 2016, they're very similar year where you have losses. And what it simply says, whenever you have a losses, right, the following year will be a better year. Yeah, will be a better year. Okay, so right now we see 2016 was -3%, then we have a 2017 gain. Okay, and then 2019 we have a -6% loss for the year, then we have a positive year. We have of course 2024 is a good year. 2025 if it come out with a loss, then we might see 2026 to start off with a positive return year. Right? That doesn't mean that you buy and hold, you're going to make money. I believe 2026 is still pretty much a trading year, which means shorter period, you go for the swing period, trading is the best. Something between 20 to 40 days holding day period. We've done a lot of back tests over the last 5 years with our trading bots in our company, and we find that a lot of 20 and 40-day period where you have a nice swing going for somewhere between 7 to 15% gain on stocks. Now, tonight, our talk will be focusing on structured warrant. And I understand from structured warrant, and the best person to talk about will be Zac, where you get leverage 3 times, 4 times, and 5 times, right? So typically, if a stock, we are looking for 7% in a 20 or 40-day swing cycle. And if you get that, you multiply by average about 4 times leverage. That's about 28%. Pretty good for a small account holder, right? So, but you don't want to swing for 20 to 40 days in a structured warrant. Usually when you get that nice optimum TP, say maybe 10, 12% in there, you want to exit quickly. Well, the volume is there. Okay, now I think Zac is going to go through some of those parameters in structured product, but I want to teach everyone to look at the underlying, okay, which is most of the structured product are based on. You look at the mother share first, then only you go and see whether it is a call or put, okay? So going back to the same thing, 2019, 2016, definitely a negative year, then 2026 will be a positive. So that allows us to start positive. Then the next question will be, in 2026, what will be the best month to buy? That's why we look at the seasonality. So in short, if you look at all the green and the gray, and by the way, this is the website where you can get this for free, okay? Barcode.stock, or you just type bar chart, KLSA seasonality chart, you can get this, and it's up to date all the time. So a lot of information that I provide tonight are FOC, okay, including some of the Pentagon guided chart where you can also get it. I'll talk more about it at the end. Very importantly, we found that seasonality by dip. So basically, the dip usually happen in May, June, September. So you can see from here, May dip, June also dip, September dip. Now this is important because whole point is we want to time that cycle 20 days to 40 days that give you the best odd of the swing. I do know some people trade very short time frame, 7 days. This is fine, but please back test them. A lot of the things that we do in TradeVSA, we undergo very stringent back testings. We know that a lot of will have better than 50% chance of winning, looking at the reward to risk. So that's eventually how the algo works. And I think the message I want to bring all to everyone who's listening is when you go into trading or investing, don't guess. Do less guessing, more data driven. And of course, you may not have the time to know about all this data. That's why you rely on available facts that you can either use AI model or ChatGPT to help you to research. And the more research, more data driven, that will take less of the guesswork out from it, right? So that's why I believe CLSA has shown me they have a very good live metrics that does all this structured warrant to allow you to calculate which one is the best thing, and you have that short cycle and get that TP, target profit, and get your gain, and then come back again and keep doing it, keep doing it, keep doing it, right? So here, the strength, let's talk about the strength. Strength comes in July and August and December. And December, that is the one. And so far, what I've seen for December is the last 3 days after Christmas. So July, August, September was minus 0.29. And it did close. You can look back all the years in here. But what's not so nice is people are always looking for Chinese New Year rally, right? And usually January again, it is a negative. Last year, this year, 2025 was the worst, minus 5.2%. So come January, those of you want to take a holiday, right? Whatever you can see, come until the last week of January, then the market will start to pick back. Even when it starts in February, you don't want to, come back in February. You want to come in back in end of January, where the cycle's coming up. So these are the methods I use to give myself the best odd. As I said before, data driven here. Okay, so earlier on, going back to 2025 is a base building year, right? After we saw a negative return in 2016, 2019, right? And 2025 with another, 2 more weeks to go, depending how you hold up. But I do believe the 1600 level for the CI will hold. And I don't even want to talk about the small cap as well as the FBM 70 mid cap. Both are, I think, double digit down, about 10% and 11% down too, all right? So on the market cycle, this is the 10-year cycle, we look at it, right? So, which is good. I think some of you can take photo of this and just be aware of it, right? You see in February, right? You start off with a down, then February will pick up a bit, then and then you heard before, right? Sell in May and go away, right? So sell in May and go away, which doesn't really apply with Malaysia because come end May, June, you see the up market will move up, then September you'll come back down again. So November was a down time, you can see this down, and then December, hopefully we see a bit in here. This has been ongoing for the last 10 years. If you trade within this kind of window that I've talked about, right? Best month will be July and probably December. January definitely not so good. I may be off because these are all based on the seasonality that we see. All right. So then a news I came across yesterday about the IPO, right? Now, of course, Bursa has a very good IPO year, record breaking, but like it or not, half of the IPO were in red from their post debut. So a lot of people who go for all this pink form actually lost money. Okay, and but one way to really make back for this, I believe, will be structured warrant, where you have a proper strategy, data driven, and a method. Of course, you want to back test this first again, and that's why we do this kind of CV education to share with you with this, and then you can go on and paper trade it first before you put your real money. And if you do, try with a small account size. All right. Then let's look at the selector performance year to date for 2025. Right now, I think there are probably only 3 sectors that is positive gain. Here will be REITs, real property investment gain. Plantation was a good year. You can see palm oil prices continue to gain. And construction, all right? Now, construction, I will talk more about that one. So REITs, 7% gain, plantation, 7%. So if you don't have any of these 2 stocks in REITs and plantation, you probably didn't make money. I was talking to one remiser, and he said that 2025 was a brutal year. It was the worst year that he ever had. Right? And my sentiment is reflected what you see here, right? So you can see consumer is down. Energy is down year to date. When we go back to this 30th December 2024 until this was, I think, just yesterday afternoon when I did this. Okay, FBM 17, you can see here, right? 9%, so it covered almost about 10%. FBM small cap 10%, technology is 11%, and healthcare, the glove maker, was undergoing extreme pain. You can see, minus 34%. A lot of the rubber glove billionaires now has lost a lot of money too. And as such, a lot of these indices lag behind SGX, okay, and even Hong Kong and S&P 500. As an educator myself, okay, I always tell people, we must always equip ourselves with knowledge. Go where the money is, okay? That's all. That's the only strategy I ask all of you who's listening. If you see there are better returns in that particular market, go and learn about it. Now, previously we have crypto. Now crypto is going through a winter period, right? Then where is the next boom area? Go and study them. Be a data-driven strategy trader. Yeah. Don't be guess here, guess there. I hear this, I hear that one. Right? No. Do your homework. Attend as many of these free webinar and ask smart questions to the speakers like myself. Right? I always cherish and enjoy good questions. And if I don't know, I probably tell you I don't know. I have to go and research on it. So let's look at the first sector, which is technology. All right, this is the most well-researched, and in a way, it is affected by the global supply chain with the AI and also EV, all right, generative AI, all those. No doubt, you see, 2025 again was minus 13%. A better year was only 2.5%. The best time where we had was during the COVID time, where everybody was stuck at home, everybody have to buy extra mobile phone, extra iPad, extra notebook to just work at home. And that's why you see that big boom. And after that, you can see there's a huge drop on that one, right? Again, if you look back on this minus 12% technology, and compared to the US technology, there was one very good ETF, XLK, right? You can see XLK is doing pretty well. Last year the list is 15%. If not, look at S&P 500, which was 15%, 15.3%. Okay, S&P 500. So the technology stock is plus 15%. Then the question is, why Bursa Malaysia minus 12%? There is a reason behind that. Now, if the technology were to play catch up, which is 2026 will be a recovery year for the technology stocks, right? Because it is already from a very, very down base. And I don't think technology will go lower. I don't think 2026 will be another 20% down, okay, for the year-to-date return. But what made it really horrible was the January and February. You can see, minus 10 and minus 13%. The market just plummet first. Then only recover October, September, right? Then November plummet again. So there are going to be two period, probably 2026, where the market technology for Bursa will play catch up. It will, because it has to follow it. Now, one of the reasons, if you look back to this, from a recent Hong Leong Investment Bank report, which is Q3, just came out here. They say that tech sector stalled because there were headwinds, and the usual thing you will hear that certain company been sanctioned, or they did not get the AI deal, or Trump sanction, don't allow this company or that company. But if you look into that report, only 2 of the 15 companies exceed expectation. And that's very alarming. If you look back in the US market, which I have in the final slide, that many of the average S&P company in US were exceeding expectation. So when you have 2 out of 15 that only exceed, then it's a very small percentage. And that's why no doubt you have this minus 12% in here. So going forward, maybe by the time the completion of the first quarter 2026, a lot of this will improve. Then you'll see by then you already probably have 2 positive gain in the index than all your technology. So team-wise, it is a technology recover I'm looking at. Not yet, it's not happening yet, but this is how, if I were to make a vague prediction, that's how it's going to be panning out. Okay. So on the characteristics thing, tech show that repeated deep drawdown in weak years. Okay. Strong rebound after a lot of selling. So right now we have heavy selling in month of November. December not yet finished. So we don't know yet. Okay. So if December show some sort of sign of recovery, then you probably get 2 months. When we have January, February will be recovery. Keep in mind the weightage of technology companies in the FBM KLCI is very small only. So usually when you see technology stock recover or go up very high, CI tak jalan. Okay, so that's why when you look at CI, you have to look separately on the particular sector. In most of the methodology that we shared through our company TradeVSA, we tell people to always look at the sector first. Okay, because if you just look at the index, and we all know FBM KLCI index is heavily weighted towards finance. Because it's towards finance, then you will see when finance tak jalan, everything is also not moving. But then you have sector like technology will be moving. Yeah. Then of course Malaysia currently is banking on more on the what I call the local domestic growth story. A lot of technology stocks rely on global supply chain, the AI growth story, but for construction, it's definitely a local Bursa thing. So you look from here, going back to 2024 was the best year, right? The data center, but this came certainly on the tail end of they can see it started somewhere around here, December 2023, and it particularly grew through here. That's why we have this 60% return. But this year, all the good news has already been priced in, right? Stock market always move ahead. Remember, 9 to 12 months ahead of everybody else, right? By the time you hear on the news, everybody talk about it. January, the train already left. Okay, keep in mind, already left. So keeping up in news is not the best strategy to play into the stock market. If you just read news and you buy according to what the newspapers say, and you don't read the chart, you don't read the seasonality in here, most time you end up losing money. Yeah, just keep that in mind. So if you look at construction, show mid-year rebound after early. Again, everything that sell off will always rebound. And then bullish economic cycle year will generally be up. Now, if you see a strong infrastructure that we built was actually around the 2010 to 2014, right? Right now, the CIMB research, okay, on the 13 Malaysian plan, master plan, looks pretty good. You got this whole list around 120 to 60 billion government link infrastructures, water, I think water treatment, they're going to rebuild some of them. The Penang Mutiara line LRT, the MRT3, okay? So those, and then the water scheme, water supply, all these things that you normally never heard about it, but these are so-called infrastructures, okay? 2.9 billion, the highway, all right? So when you talk about highway, generally the construction company, the local construction will benefit. Yeah, I'll talk about what stock we will look into. Then you have the Kuching Art. These are all special mention, and possible the KL Singapore high-speed railway. All right, it's been dished for a while. Whether 2026 will see a revival or not, I don't think so. Okay, right? Because none of those private company are willing to pay more unless the government come in. Because in any high-speed infrastructure, government need to have a hand in that. And if anything fail, the government must go in and rescue some of these private construction companies. And because of that, the government not willing to go in, a lot of the private construction company hands off. If you look back at the high-speed rail in UK, that was a big budget money eating up to the UK budget. And right now, they are still plagued with a lot of problem. You can Google on that one too. So our government, the Anwar 10 Prime Minister, know about these things, and that's what this not something they want to talk about it that often unless the Singapore government is willing to put more in, because else it's going to put the whole budget mechanism into jeopardy. Then next, remember I talked about the REITs, or REITs was performing about 7%, right? So that was another one. You can see REITs since 2023, it's done pretty well, 6, 11, and 1.2%. Now, I do feel that REITs, no matter how boring they are, for longer term seeking, if you are above, let's say 50 years old, 45 years old, some portion of your portfolio should go to REITs because it appeals as a yield interest rate. When interest rates are very low, right? The dividend they're giving out are very appealing. And also it allows you to rotate to what we call lower risk. Because why low risk? A lot of the contracts that is being signed generally are for 3-5 years. So anybody who sign any of the tenant, usually it's a long contract. So there's always some promise yield into it. So you're pretty much guaranteed to it in here. Only is the interest rate. Okay, so when interest rate drop, the bond prices will go up. Okay, so that's where we will see the interest rate in Malaysia will help out. But in Malaysia, if interest rate go down, I think property prices generally do better, right? Why? Because if you look at the US market, there are talks right now to cut interest rate, right? Which is I think next week, the US Federal Reserve Fed Watch, which I'm already watching it. Okay, the last heard percentage was about 80 plus. I'll talk next on that. Then Bursa Finance, key seasonal. Okay, now Bursa Finance are some of the big heavyweight, like Public Bank, Maybank, and all of these. They are already in this big group already. Okay. All right. Then next, so finance sector show consistent stability across most months. That's true because these are generally bread and butter of many banks. Loans. We are talking about loan growth, around 5%. Loan growth generally almost very similar to the GDP growth. All right. And it's usually slightly more than the population growth, loan growth, right? If the population growth is 3%, loan growth is below 3%, mati low. Bank is going to be very tough. So that's what they are very, and right now, another one that haven't been reported are digital banks, right? You heard about digital bank got something like 3 million depositor. So those numbers eventually need to be, blend in together with the overall loan growth. And they're giving out a lot more loan, 5,000 personal loan, 5,000 ringgit. I think they give it a lot to Grab drivers, things like that. That's what I heard about it in here. So those unfortunately, digital banks are not in the stock exchange, so you can't really buy them. All right. Then let's talk about the US market. Okay. Now I will comment on China a little bit more. Now the US market so far is still considered the best market it is. Partly also Trump being a business person, very oriented towards a big corporation. And they even have a lot of the new law, AI, and a lot of the so-called social program, like the USDA programs that was been put in for the poor foreign one. They actually took it out. So those actually benefit many of the corporation. And over the last 10 years or so, for US market, many of the agricultural food distributor, supermarkets, all been sort of consolidated. Used to be there were about like 20 or 40, but now all considered to 4 or 5. Even for poultry and meat, there are only about 4 or 5 of them. So these 4 or 5 of them, they are like controlling the prices. I think the more recent one is Netflix buying Warner Brothers, right? So like it or not, they wanted to have a fair anti-competition, right? Antitrust competition. But instead, with Donald Trump being the president, this has favored the major corporation, right? And even they throw away a lot of the EPA law, right? That you need to have certain regulation, and even for fuel, what we call the gas, exfume gas from diesel engine or combustion engine, they actually lower it down. Okay, so because of this less regulation, right, and meaning less what we call the fine for these big major corporations, they are more incentivized to do more, right? Do more for themselves, but in the process causing more climate change. Okay, so that in a way show why you have record high profitability. Okay, and it's just not the tech ready. 7 of 11 sectors are more profitable than before. Again, because not only restricted to AI, you're looking at the agriculture industry, basic material, consumer, all are doing better, right? And they are doing better because for a start, one basis is that if you look at it, AI has come in, taken some of the jobs. I would say something like 20% right now, or from the market. So a lot of the previously done by intern, they're finding more difficult in there, right? Finance, utility, consumer discretion are posting much higher than average margin return. And much of a US market, at least for this month of December, will be the US Fed interest rate cut, which the Federal Reserve will meet on December 10th and 12th. Then you have this next coming Federal Reserve chairperson candidates or elect will be Kevin Hassan. Now, Kevin Hassan is a Trump supporter, right? When Trump asked him to cut interest rate, he said, "Yes, sir. How much do you want me to cut?" And he is that crazy. Okay, so with that, you will definitely see the US stock market will have a very different from the US economy. The stock market will move ahead in favor of a lot of the corporation, right? And this is how, lack of a better word, how corrupted it is. There was another US Congress lady, Marjorie Taylor Greene. She made something like 83 million on insider trading information that Congress person or congressman and woman access to, and they are not charged for insider trading. That's one of the big benefits being in Congress. So it tells you how corrupt it is. But in a good way, if you know that this is the basis where the corporation will gain, follow the smart money, as I said before. And those of you who have bought the Magnificent Seven follow a very similar path going into this. Okay, so that's it. Now, on the side of the China market, the resurgence of the AI, we've seen a lot of EV car coming up. We've seen a lot of robots coming up, and we've seen better tools, cheaper cloud solution coming up from China. Is definitely good for these companies. And a lot of institutions are moving into China for this purpose. And my best take is actually going to the Hong Kong Stock Exchange, because they have been falling out a lot over the last 3 years. And if you look back early on this year, the Hong Kong Stock Exchange is up 32%. And I think next year will be very similar trend. So make sure you buy on dips. And what I've just shared with you for the Malaysian seasonality, also go to the bar chart. They have a seasonality also for the Hong Kong Stock Exchange. So you can apply the same thing there. So don't do any guessing. If you're going to be looking into the Hong Kong Stock Exchange, looking when to buy, just type Google bar chart, Hong Kong Stock Exchange, then you'll see the seasonality. Very similar to the Bursa Malaysia too. And you can do the same also for the US S&P 500. So that way, as I said before, going back to less guessing, more data driven. And this is why education is all about. So the fourth sector powering the Malaysian recovery, I call it recovery, okay, for 2026 for the first half is definitely the loans. The loans are still very healthy. The GDP right now is 5.2. We have been very strong. We did one. So a lot of people say, hey, with 5.2, why the stock market tak jalan? Because after you don't have the foreign funds coming in. And also you don't have the big names, right? I think Maybank is certainly doing a great job trying to become the big banks, in Southeast Asia, right? If you go to Thailand, you go to Singapore, it's huge, the Maybank presence in here. And then they pay damn good dividend too, 4%. And they did give a good CAGR, cumulative average growth over the last 3 years, about 10 to 11%, okay, on that part. Second is the mega infrastructure rollout. We're still seeing that the LRT, the Penang LRT3, and some of the big benefiter will be next slide. Okay, we're talking about IJM, Gamunda, Sunway. The data center is pretty much old story. So you don't want to be buying when the market going up. You want to buy on a dip and look at the valuation, very important. Number 3, technology recovery, which I talk about it. You've seen tech this year down 12% in the sector, right? So if the tech hit a base and some companies started to perform better due to cost cutting, then you'll see the technology sector, the Bursa technology will play catch up to the US technology sector. That's where this market will move back up. They will. The question is just don't know when in 2026. And hopefully by first half of the year, 2026, we'll see that. Then the mid cap. Now we'll talk about the mid cap, right? Which is down 10%, almost 10% and 11% respectively for the small caps. Again, usually this kind of very bad performer, whatever, right? Heavily oversold. But once foreign fund come back in again, they will night one. Because a lot of them are still making money. The only question is because right now they're leaving and the local retailer, local support is not there to hold it. And you see huge collapse a lot of the stocks when it comes to year-to-date return. All right. So 4 themes: finance, the usual stable; construction, technology, and mid-cap liquidity. Okay, the mid-cap are what you want to trade in the shorter terms. So my portfolio positioning, if I have 10,000 ringgit in here for the recovery play for 2026, I look into the finance sector and the industrial leader. Things like CIMB, Public Bank, RHB Bank, and Telecom Malaysia, which is actually up in a nice trend. Bank move with the economy, right? Maintaining at 5.2% growth and good for the accumulation phase in here, okay? Then the construction, because there's still trickle-down effect from the economy, right? Sunway, Suncon, okay? Gamunda, IJM, these will be your property play. Now, if you ask me, you only have 10,000 ringgit, you can't buy much. Choose 1 or 2 from each of the sector. So 30%, you just, there's one product, I think, up by CGS where you can buy fractional stocks. If not, the structured warrant, some of these has like CIMB, I believe CIMB has a structured warrant there. Maybe Zac can talk about this. That Sunway or Suncon, Gamuda, whether they have structured warrant that's relevant to it, then you can trade those on a swing pattern, which I talk about the 20 days and the 40-day cycle, but you don't hold 20 and 40 with the structured warrant, much shorter period in here. Maybe Zac can advise on that part. Then the first one was the first 60% of your 10,000 ringgit. Then the next 30,000, you go for REITs, okay? Pavilion REITs, and this pays something like 5 to 6% yield, and they have strong yield, long tenants engaged in it in here, right? And the last are your mid-cap stock momentum, the growth team. There is now going to look at SL West, Samedem, and Hapsing Plantations. Okay, there are a few more, but I just sort of pick these few things. And last on my list, if not, is a short-term play. Atlan, Sign, PW, and LHI are poultry play. And NSOP is one stock many people never heard about it, but it's a damn nice trend in here. Let's talk about first one, NSOP. Now, this is a Pentagon guided chart, which have the buy and sell signal one. You can see that, right? Still in a nice uptrend in here. Check it out, okay? trend still looks good. Volume is still getting in there. And then you have Sign, which is a kitchen maker. Okay, over the last 6 months, it's been trending up. Seems to be there are smart money accumulating on this one in here. So usually, if you see this kind of pattern continuing on until next year, that would be good. All right. The Poultry Bay, Leong Hub. Okay, this just started to break above the 65 cents in here. A nice pullback. So some of these short-term play less than 3 months are trading stocks in nature, and good to watch them. Okay, paper trade them. And PWF looking to break above the 80 cents. This is another poultry player too. And TMNet looks a very nice one. You can see the nice long trend stage 2 share continue to go up. A little bit of pullback in here will be good. But it looks like it's well supported institutionally. Another long-term play. This long-term play, RHB also. You can see RHB is also breaking above the $7.25 mark in here. All right. Hope you got some of these, and then maybe you can transition to the structured product in here. All right. So that's all I have. And this is my contact. Feel free to text me. Hey, Martin, I listened to you. I find this very interesting. Blah, blah, blah. I want to touch base with you. That's my contact number. All right. Hope you have a wonderful a session with my fellow colleague here. Zac is going to be telling more on structure. I did cover some base for the structure with some short term and longer term. All right, back to you.
Yep. Martin, when look at your 10,000 portfolio, it adds up to 110% though.
Oh, okay. Maybe my mathematics. Okay. So let's go back to there. Basically. So if you go back, construction, then you just do apa ini? 20% rates.
Okay. 20%, huh?
20% rates. Make correction. Emala,
Okay.
you can do a weighted average reduction. Normalize it to 100.
Okay.
Okay, I will
Understand.
do on my slide here.
All right.
Okay, I will stop sharing now.
Yes. Thank you so much, Martin, for sharing with us where are the trends going, what are the seasonality patterns, what are the US market doing, and where should we where would likely place that we can park our money in 2026. Um, I would like to introduce our next speaker who will share with us how do we use structural warrants to make the most out of our trading. So he is currently the head of equity derivative desk in CLSA Securities Malaysia, and he has had stints with several financial institutions in Malaysia for the past 13 years and has extensive experience dealing with derivative of various asset classes, including equities, forex, interest rate, and commodities. He's none other than Mr. Zac Chooi. So, Zac, how are you today?
Hey Shane, thank you. Doing good?
All right, perfect. So, I will stop sharing my screen and hand over the control to you. Can't
All
wait to
right.
learn from you. What are structural warrants and how do we leverage on this product? In the meantime, if any question for Martin, you may write them in the Q&A box. We will do the Q&A right after the presentation of Zac Chooi and also right after the quiz that we're going to conduct later. So make sure you pay attention during Zac's session. So the quiz will be centered on the presentation made by Zac. Are you able to share your screen?
Yeah, once again, I'm having some problem looking for the slides.
Okay, no issue. Okay. So you may type your question in Q&A first, and then we will revisit your questions during the Q&A segment. So we have a quiz coming up after Zac's presentation, consists of 5 questions, multiple choice answers. So if you pay attention during Zac's session, you may stand a chance to be one of the winners of this quiz sponsored by CLSA.
All right, I'm all good. Okay, thank you, Shane. All right, good evening, everyone. Thanks for your time. I'm just gonna quickly go through a quick refresher in case you're not familiar with structured warrants. If you are, then do bear with me very quickly on some of the basics of structured warrants here. So, if you are not familiar with structured warrants, how to spot it on your trading app or your trading platform, it's that these are instruments usually comes with a stock code of stock dash C or H. C stands for call warrants, while H stands for put warrants. Do note that all these structured warrants are listed on Bursa Malaysia Securities, so and offers leverage returns to investors, right? These instruments usually also has finite life, mean that they had expiry date, and is not the same as company warrant. The major distinguishing factor between a structured warrant and a company warrant is a stock code on the dash C and the dash W for the company warrants. Right. So typically the reason to invest in structural warrant is a lower capital outlay. I think what Martin shared earlier is very relevant in the sense that, if you only have 10,000, sometimes it's a bit hard to do a portfolio allocation to a lot of meaningful names. So structural warrants typically only trade at a fraction of the underlying share price. So could be useful for, people with a limited capital, like most of us are, to, trade strategically to some of the sectors, right? So another interesting note about structural warrant is that they are a leverage instrument. So it actually allow you to gear up your gains, right? So in like what Martin mentioned earlier, sometimes you make a very good trade, but 7% is a very reasonable or very good gains you can make from a certain share trade sometimes. But if you think that 7% is not enough, maybe this kind of leverage instrument is something that you are looking for. And lastly, liquidity is also something that is very good for structural warrants in the sense that all structural warrants in Malaysia have a dedicated issuer slash market maker like ourselves to make a very tight bid-ask spread, also provide a lot of liquidity for you to buy and sell at a meaningful amount without incurring any transaction costs. So all this means that it's very easy to trade and very friendly to investors to enter and exit into positions as well. Right. So at the moment in Malaysia, there are all kinds of structured warrants over different underlying. So there are the single stocks variant, which are very common for Malaysian single stocks, of course. There are also the indices, which the most common and most actively traded warrants are at. Actually, is at the indices, usually the Hang Seng Index and its variants at the moment. There's also been commodities warrants, which are new introduction to Malaysia a couple of years ago, and also some warrants over ETF, which are also very popular. So I think nothing, entice people than a simple example. What you're seeing on the screen here is a Bloomberg chart to show that, how you can utilize structured warrants to leverage up your gain. So this one, of course, like what Martin shared earlier, up until October, the tech stock was doing quite well after the dip in April, right? So, for example, Unisem actually was up about 61 percent over the same period, which is a very, very good trade. If you manage to buy at this kind of timing, we did not capture the absolute low point and high point as well. So, if you bought it and held it until October or November, it would have been a very good trade for Unisem. But just to illustrate, over the same period, if you have utilized structured warrant, for example, our Unisem C45, we have made more than double the gains, over 154% gains over Unisem over this period. So this is actually quite an interesting example to look at. Of course, the opposite is also true. If you're not so lucky and held on to a losing position, sometimes you actually amplify your losses. So what we share on the screen here is DNO and its corresponding warrant DNOC20. So if you held on to it from simply from 31st October to the end of November, just for a month, the market share will have lost you about 31%. Well, the structural warrant will have lost you close to half of your initial capital. So do take note that the leverage is a two-way street. Sometimes, when it goes up, of course, everything is good, but when it comes down, it could hurt you a bit more than you expected as well. I think the next slide is going to be very interesting for everyone. Just sharing the structural warrant market performance in a nutshell, showing some trends we are seeing for the past 5 years. Sadly, we can't show you the absolute notional amount. There's a few very interesting trend we're seeing in the structural warrant market for the past few years. I think the first thing to note is that, if you have been investing or even watching the market since 2020, you probably will have noticed that 2020 was the year where Malaysians investors generally took note of structural warrant as an instrument, and the trading for the asset class as for structural warrant skyrocketed. In fact, that was one of the best year on record for structural warrants. But actually, in 2024, we have come very close to emulating that. Last year, the overall structural warrant market saw almost as much turnover as 2020. And this year, up until October, we are already almost at the same level at 2024. Means that if we factor in November and December's numbers, we actually would have seen higher trading volume than 2020. Right. Another thing to note is that the high level of foreign participation in this market. Remember that this year we're seeing as high as a turnover as 2020, but the biggest difference compared to 5 years ago is that now there's a much higher foreign participation compared to 5 years ago. Right, from 22%, we are seeing that 37%, about more than one third of the market is now foreign participation, with 20%, 27% of it coming from foreign institutional investors. So this is actually a very interesting development that, the warrants market now is very much in the eyes of foreign institutes. So, it's an instrument that they're looking to trade actively, which is something that means that, there is probably some merits to this instrument to pay attention to. Also, to take note that in 2020, retail investors made up 60% of the warrant market, as we highlighted in red here. But this year it's closer to 18% because locally, the major investors or the major traders of structural warrants have been the intraday trader, the IVTs. So yeah, both the fast money, the institutional money, and the foreign money is in the sector now. So from a retail perspective, maybe it's time to revisit and see maybe like how Martin mentioned earlier, using some strategies, back testing, and certain swing trading strategies, whether you can make more gains with a relatively smaller capital base for 2026. Okay. Next up, we're going to move slightly into the theoretical side of things, just to share a bit more about structural warrants. Right. I think the very first step is we want to share, if you are indeed, after hearing to myself and Martin earlier, and thought that, I would really like to start off and see what is available. Like Martin say, if I want to trade Suncoin or trade CIMB, how do I know what warrants are available out there? So step one, I would recommend that you go to our website, TradeWarrants.my, and under the tab Warrant Tools, Warrant Search, you can actually play around with the tabs here. It's quite intuitive. You can find all the underlyings that we have issued warrants over. So, like some of the names Martin mentioned, or some of the names you guys read about, or some of the names that have come across your attention recently, try to look for them in our system and see whether you can find a warrant that suits your need. We currently have more than 177 active warrants that covers 99 names in Malaysia equity alone. So you probably can find most of the names that you are looking for, including all the names that Martin mentioned in his slides earlier. The bank's names and all the construction names are in there. We don't have overreads, of course, but even for the mid cap momentum plays that he mentioned, Solaves, we have covered all those names as well. Okay, some key terms to remember when it comes to structural warrants. I've listed on the screen here some very important terms for you to take note of when you want to invest in warrants. The first one is exercise price. This is important because over 90% of structured warrants in Malaysia are actually call warrants, and buying call warrants mean that you actually hold a bullish view of the underlying stock. Right. So in this instance, for example, you will want the underlying share price to go above the exercise price, meaning that you end up with an in-the-money structured warrant. So just a quick reminder is that in this case, exercise price is a finishing line. You want your underlying price to go above, right? Being above means that you're in the money and will end up with a cash settlement from the issuer. Also, to take note of, you want this to happen before or at expiry date. So the sooner it happens, the better, of course. So all structured warrants have an expiry date, right? It's important to be right about the direction, the magnitude within a set period of time. And lastly, a couple of things to note is the effective gearing and the sensitivity measure. Effective gearing basically just means the leverage effect of returns. So the higher this number, that means that the more your warrant price will move when the underlying share price moves. Meanwhile, sensitivity measure how responsive a structural warrant is to the underlying share price change. So the bigger this number is, means that the less responsive the warrant is to your underlying share price movement. So effective gearing and sensitivity is a bit different. So all else equal, you would want a very high effective gearing because if the underlying price moved by 1%, 9 times effective gearing will mean that my warrant price will have gone up by 9%, which is a good thing. If it's a 3 times, it will have only gone up by 3%. Right. Meanwhile, sensitivity, you will want the lowest number possible. This means that if sensitivity is very high, it will take a lot of movement in the mother share price to move before my warrant price will track this movement. Right. So a high sensitivity number is not favorable to the investor. Okay. So this is what we're trying to avoid. Lastly, a lot of investors look at premium when they invest in warrants. There's something that we advise against because the premium actually, by a formula or mathematical definition, only measure how much the share price or the warrant price need to move by before you break even, right? So when we trade, we're probably not looking at a whole till break even kind of situation. We are trying to make money here, go above. So it's a lot more sensible to refer to the first four measures that I mentioned earlier to find a warrant that suits your need rather than referring to premium as a measure. Next up on the screen here, we have pulled up some factors that affect a structural warrants price. If some of these measures, sound familiar to you, because it's actually just what the Black-Scholes option pricing model imply. Right? So structural warrants by its very own nature are actually just mini options issued by a financial institution. So as expected, these options are best priced using a Black-Scholes option pricing model. And what you see on the screen here are basically just how each factor will impact the call option or put options price as per the Black-Scholes formula would suggest. So if you are interested in this, do feel free to explore a bit more with ChatGPT or Google. I think that's gonna help you with your understanding of structured warrants. So a second very key important slide for tonight. This is also on our website, as you can see from the color scheme. If you want to trade warrants, I think this particular tool is very useful as well. Under the Warrant Tools tab, look for the Matrix tool. Right in here, there's 3 key information that you should be referring to. The first one are the 4 key terms that I mentioned earlier. Exercise price to ensure that you're in the money, so that you want the share price to go above this level. The second thing is exercise ratio, expiry date, and the effective gearing level. Remember, the effective gearing means just how many times gearing effect you're getting. Second key information is the sensitivity issue. Use a sensitivity measure. You will notice that we did not explicitly state the sensitivity measure, but if you're referring to our matrix, you could see that from the different color shading, the sensitivity is actually illustrated here via the color shadings, right? So in this case, front can C42, the sensitivity is about 3 to 4, about 3 point something, I would say, right? So it will take 3 to 4 ticks of the mother share price movement for the warrant price to move 1 tick, as you can see from the circle region in here. All right, so just a quick summary of what we've discussed very briefly just now. When trading warrants, always do your homework, as Martin mentioned earlier. Do your homework on the stock and then time it using warrants for a different kind of strategy. Back test it. Just remember that when you're analyzing a chart, which I believe Martin is a big expert of. Do not analyze a chart of structured warrants as it doesn't really work. So what I would recommend is analyze the charts of the underlying stock, and from there utilize a warrant matrix like you can see here. Because we are just taking a snippet here. Actually, we list out a lot more levels. You can use this to derive take profit and stop loss levels, entry and exit points, where the corresponding share price will have a corresponding warrant price levels. This will allow you to time your warrant trades a lot better. And also do note that there's no such thing a shortcut or free money or a 10-minute video that can teach you how to trade or unlock unlimited gains. So do be careful when you see some kind of I would say fast money or fast shortcut kind of video when it involves leverage instrument especially. Lastly, just like to mention that CLSA being the latest uh, market maker approved by SC and Bursa to enter into the Malaysian market, we provide liquidity. And why is liquidity important? Because it will allow you to buy and sell a relatively huge amount without having to wait or without having to lose out to the issuers. Right? This is one of our biggest commitment. If you are interested tomorrow morning, do go to our website or go to the platform and search us out. You can see that we market make for more than 3 million or 2 million units of warrants on both sides for most of the names that we cover. This is a quick calendar to illustrate what happens at maturity, although I personally do not recommend holding a warrant for very long, especially not until maturity. In fact, my personal advice is to always avoid holding the last 1/3 of the life of the warrant, basically meaning that for a 6-month warrant, try to not buy it during the 5th and 6th month, right? This is because the time decay is most severe during the last 1/3 of the life of the warrant. And also do note this is counter or this is against the uh, intuition of a lot of finance guru preached a couple of years ago. What happened back then was there was a lot of finance influencer who came around looking for warrants that have negative premium, very close to expiry, and preached that it is free money. What actually happened was a lot of people lost money when they followed those trades, right? So the negative premium, what it actually saw were warrants that fell within the blue highlighted days on the calendar within the last 5 fixing days, right? So some of these days, the warrant price may trade at slightly below the so-called intrinsic value, creating an illusion that if you buy it at that time, it may allow you to make free money, but actually it does not happen, right? So do take note that try to avoid trading anything that is close to maturity, especially now on Reddit, on a lot of forums, on a lot of TikTok videos. You see people preaching you, teaching you to trade at the money overnight or at the money options on US exchanges that's going to expire in a couple of days. There's a lot of risk involved trading short-term dated or near expiry options, right? So if you are interested in this phenomenon or this kind of trading activity, it actually has a lot to relate to a measure called gamma. You can actually also again Google or go through ChatGPT if you're interested in this kind of trading strategies. It's called gamma trading strategies, or some call it gamma scalping. But do take note that my general advice: try not to hold it until maturity. Try not to touch warrants as near expiry as the ones that we're showing on the screen. But if you are very, very deep in the money, or for some reason you held it until maturity, right? What will happen when it comes to expiry? All right, in this case, the expiry is on the 10th, highlighted in yellow. As the issuer, I myself will calculate the average closing price of the underlying share, right? Say Franken, for example. We'll calculate the underlying share closing price for 3rd, 4th, 5th, 8, and 9, and then use it to compare against the exercise price, which is why I mentioned earlier, exercise price is very important because it determines whether you're in the money or not when it comes to expiry, right? So we use it against the exercise price, and the difference is settled to the investor using cash. And do note that although the expiry date for this warrant highlighted in yellow is on the 10th, the last trading date is not the 10th, right? The last trading date is actually 2 days before the expiry. In this case, on the 8th. So there's quite a bit of rule involved in this kind of expiry. So unless you're very, very clear with the rules, and the risks involved, highly advise against trading any warrants that's so close to maturity. And then lastly, again, just to reiterate, this is our website, tradewarrants.my, CLSA. That's our hotline number on the screen. So if you have any questions after this, feel free to get in touch with us. We are happy to discuss further. Lastly, as compliance dictate, please note that this presentation has not been reviewed by SC. Thank you so much for your time. I'll leave it back to Shane now.
Thank you so much, Jack, for sharing with us what are structured warrants and how do we go about trading it to get the good balance between leverage, sensitivity, and so on. So, if any question to ask our speaker, Zach, you may write your question in the Q&A box. We will conduct the Q&A sessions. All right. So, if any question for our speaker, you may write them at the Q&A box. So I guess the first question is targeted to Martin. Okay. Under the 13 Malaysia plan, you know, do you know what is the budget allocated for East Malaysia development? So this question is
I
by
do
Jane.
not know the. Can you hear me? Can, right?
Yes, I can hear you.
Yeah, I think this has been always the focus point why there's so much hoo-ha coming from Sabah election and also Sarawak election is the resources, that the so-called federal government takes in and how much they put back. So I believe that number is somewhere less than 15%. That's East Malaysian are getting from the 13 Malaysian plan. I think that worked out to be close to that's I don't have the exact figure, but it works out to be less than 15 billion. So, and that's why about less than 15% are for East Malaysia.
All right. Um, so the next one is a comment by Yo. Um, maybe Zach can share some color here. So he commented that a lot of current structural warriors are out of money. They are difficult to trade. So what is your view?
Actually, there's two angle to think about this from your very interesting comment. I think the first angle is that if I may, I actually did a bit of quick Google to prepare for answering this comment. Let me just put this on the screen here. I think this is for everyone's general benefit as well. Uh, what you see here is a very generic payoff diagram of a call option. A call warrant being the exactly similar kind of derivative will have the same payoff structure as well. So I think the first thing we need to take note of is that a lot of people would think that in the money call warrant would be a lot safer to trade because you are already guaranteed that you're gonna make money, right? That's a worst case scenario. But actually, uh, if from a theoretical standpoint, also from a practical standpoint, if your view of the underlying share is bullish, which is the reason you're buying a call warrant anyway, and the best point to enter is actually not in the money, which is from this inflection point onwards, right? This is in the money, exactly at where the arrow is at the money, and anything beyond is out of the money. The perfect point to enter into the warrant actually would be just at the money or slightly below the at the money point. And then if your bullish sentiment or your bullish view comes true, that's where you'll make the biggest gain, right? That is because what we mentioned earlier again, due to the gamma or the so-called the rate of change of gamma is highest around this inflection point. This is actually also the reason why a lot of redditors of influencers you see overseas are preaching trading short dated at the money call options. The reason being the gamma swing at that particular point, at the where the arrow is pointed, is the highest. So you just have to do this right a few times to be hailed as basically an investment guru because you are teaching people to make a lot of gains with very minimal movement in the share price, right? So you just have to be right a few times. But again, this strategy is, if done well, it's basically applicable across all asset class, across all markets when it comes to a call option or call warrant kind of payoff. So I think to answer Yo's question is, he is not wrong that I won't say all, but I would say there's quite a lot of out-of-the-money call warrants listed on Bursa Malaysia at the moment. But does it mean that it's very difficult to trade? Not necessarily, because there are a lot of call warrants that is in the sweet spot. There's maybe a 10-15% away from being at the money. So if you're just finding this kind of warrants, that is actually very good for trading purposes. I think that's the first thing to note. The second thing, the second angle I mentioned earlier, to come from when it's saying the difficult to trade part, I believe that, if you're looking at very deep out of the money call warrant, then yes, right? So this will go back to what we mentioned earlier. A very far out of the money call warrant will tend to have something called a very high sensitivity measure. Like we mentioned earlier in the example questions, 35 ticks is, for example, a very high sensitivity measure, right? So those are very difficult to trade, which is true. So when you're trading, I highly recommend looking at the balance, effective gearing, and a sensitivity measure, because a very, very high sensitivity measure, you have to think about it as a rocket, right? It's like a vehicle to get you to the finishing line, but you actually are sitting on a rocket. It takes a lot of feel, a lot of skills to get it started. But once it moves, or if you ever get it to move, it can get you very far. So it's a high risk, high reward kind of trade. But on an everyday basis, as an everyday investor, what we want is something like an EV, easy to get started, quick to go to 100 km/h, but can get us to the finishing line more often than not, right? So this is what we're looking for. Go for a lower sensitivity measure, very more at the money, not something that's very deep, far out of the money kind of warrants, right? So I think it's a very good comment by you to bring this up. Thank you.
All right. Um, the next question is by Rish Hardevi. I'm a new investor to structured warrants. I'm very new, right? So may I know, do can I trade with paper money?
Uh, I think Shane, you might be a bit more familiar with this, but from my understanding, the virtual trading program with Bursa Invest Lab may allow you to use paper money, or in fact, it's a virtual trading platform. So, and all the Bursa listed securities are available on that platform. So it's called Bursa Malaysia Invest Lab, if I'm not mistaken. I think for this attendee, maybe you can go check out that platform. I think the warrants are up there as well. Maybe you can back test some of your trading strategies there.
I think if the broker offers you paper trading feature, then you can make use of the paper trading feature to trade the warrants, to experiment how do you use virtual cash to trade structured warrants. If your broker doesn't provide this feature, then you can go to the exchange, which is Bursa Malaysia. Like what Zac said, you can check out Invest Lab, or you can check out the equity trading simulator under My Bursa. You go to My Bursa under equity trading simulator, which is powered by end to end. You can use the end to end trading platform to trade it with a virtual cash of 100,000. Right.
I see a question here on sensitivity. Again, a
Yes.
very good question. Let me just attend to it. 35, I won't say percent, 35 by a sensitivity measure is actually 35 ticks. Yes, that one is considered high sensitivity, right? So if you, and I'm very glad this Day has paid very close attention to the quiz answer. The answer is actually correct. So 35 ticks is a high sensitivity number. Yes, that's correct. And why the quiz answer is that the warrant price will track the underlying share price, but not closely. So if you notice, there's two very similar answers being suggested, right? So the first answer is it will track the underlying share price closely. The second one is also will track the underlying share price, but not closely. So the thing is, if we have two warrants, exactly the same warrant, say both tracking Franken, one with a higher sensitivity measure, one with a lower sensitivity measure, the one with the lower sensitivity measure will always track the share price more closely, right? So what we always want is to have a more sensitive warrant. A sensitive warrant has a low sensitivity number. A high sensitivity number, this is a bit counterintuitive. The high sensitive a high sensitivity number is actually not good for us. When the number is as high as 35, means that the mother share price need to move 35 ticks for the warrant to move one tick. Right? 35 ticks is, if you're going for, depending on how much is the share price, you're looking at a very high percentage move in the mother share price in order for the warrant to move. This is what we meant in the quiz portion and in the sensitivity portion that we discussed earlier as well.
All right. So the next question is by Lester. Um, okay, let me see if I understand correctly. I think he or she holds YTL Power C90 from in the money to out of money, even further from the exercise price. So notice that when it turns out of money, it is very difficult to hold for at the money or in the money. What is your advice and viewpoint, Zac?
Hmm. Okay, this is a very interesting question again. So just now when I give the very generic statement of when is the best point to hold. The best point is actually from a slide out of the money position to a in the money position, right? So what Lester has experienced here is the exact opposite, where he went from a in the money position to out of the money position, right? So in this case, what you will notice actually from a warrant characteristic point of view, I think what you mentioned is correct. It's a lot harder to flip back the other way rather than what we observed earlier, right? So you have noticed a few things about the warrant. The warrant has definitely become less sensitive to the mother share price movement. It will take more ticks of YTL power movement to drive the warrant price back up. So that's the first thing you will notice. Secondly, is that you will notice the gearing number is probably a bit higher as well now, right? And thirdly, YTL our C90, I don't think it's one of ours, so I'm not sure when does it expire. So the third thing is, I think you will have to pay attention to the time decay as well. I would imagine, the from the ticker code series that it should expire probably closer, quite close. So yeah, okay, January 2026, you're probably in a very severe time decay situation right now, right? So my personal advice is either cut, if you're bullish about YTL power, I would advise cut losses if you can, and reinvest in another structural run on YTL power if you're still bullish about it, right? Because I definitely wouldn't advise you to average down unless you're very, very sure that YTL power will will rocket up in the next 1 month. But yeah, I don't think it's a good situation to be in. Yeah.
All right. So let's do one last question from Lester as well. So, Zac, do you have any plan to issue foreign underlying structural warrants?
Yes, we are. We indeed do have plan to issue foreign structural warrant. That will happen, of course, in 2026. We hope to bring it to you as soon as possible. So, when we do issue, I think do expect us to come around to Shane and go around a bit of a publicity blitz as well. So do keep an eye out for us in the media when next it comes.
All right. Cool. All right. So with that, we shall conclude this webinar. So thank you everybody for tuning in to this webinar titled 2026 Market Strategy with Seasonality Analysis for Bursa Malaysia. Hope that you gain insights into the market trends happening next year and also learning how to use structural warrants to gain leverage return for your tactical trades. With that, I shall, bid farewell for all of you here. So see you again in 2026 for the webinars with CLSA. Okay, bye bye, everybody.
Thank you. Good night, everybody.
Right.
Thank you.